This is Rod Kusin and Spoolman for Risk for Wednesday, July 20th, 2011. All times on the chart, Central Standard Time. Wanted to bring to your attention some things that developed during the afternoon today and how we responded to them. Now, it was kind of interesting. We were in the midst of a demo, a live demo with a couple of our clients as the market began to rally right after about 12 o'clock. And we were discussing what we expected to see happen with the market, the pattern, and so on. And I wish we would have had a live discussion going on at the time so that you would have heard us talk about this. But let's just kind of go back and we'll show you what we had looked at. So this is a 1-minute chart that includes our premium data feed. And we were looking at this chart, seeing what we could see from it. We noticed that there was a high in the morning at the open. We had a low at just before 9:30, and then a little consolidation here getting into 12 o'clock. So as the market just began to move up is where we had our discussion take place, just after about 12 o'clock. And we said, all right, now what do we expect is going to happen with the market here? And the last new high on the premium happened right in here. That looked like a strong buy. And the feeling was, well, based on pattern, based upon the fact that we didn't hit a new low here, and that it seemed like the market was moving up into higher highs from the reference point of this consolidation, and it wasn't hitting any lower lows, we figured, all right, this market ought to run right up to the high of the day somewhere before 2:30 Central Time. And so our feeling was, well, then the best trade that we want to take is long. We don't want to take any short trades here, because even if there is a period there where short might be produced, well, chances are it's not going to continue for very long. So that was the overall picture. We thought, all right, let's go long. So what did we see with regard to the strategy in respect to the long trade? We have a workspace that is set up to trade in only one direction at a time. And this was that period of consolidation that we talked about here. And then that workspace pulled a long trade just about 10 after 12, and another long trade right in here, and then another one briefly right here, and then the market turned tail and started going in the opposite direction. Now, we had talked about taking a trade, holding it to a new high, but by the same token, there was something of a warning going on. And that warning shows up when we look at our retracements. Here are the retracements that took place as the market moved up into this high. Okay? And we saw these retracements developing, and with the number of retracements that were taking place, our general position is with high probability retracements, you don't want to ignore them because of the probability that they will be filled. And if you've watched our videos in the past, you know that we talk quite a bit about our retracements because they're very accurate. Nevertheless, we had that long trade in here. We had another one, and as we mentioned, another one up here, and I think it was right around here. And there we have these other retracements going on. So, one philosophy would be, well, all right, ignore the retracements. If you have a good fill on a long trade below these retracement lines, okay? And we did. We had one right in here. Remember, it's right there, okay? So that was it. Let's line that up, okay? So there it is. So it was below the retracement. So I was saying to the other traders, I said, all right, one approach would be, to be confident about the pattern. All right, the pattern should suggest a new high for the day in the late afternoon, but before 2:30. Now, if the market in fact comes back down, we may want to tighten the stop, but it's either going to work or it's not. And if our original fill is pretty good, we may have a very hard time getting another fill that good. So that's what we said. But at the same time, I also encourage them, never get your teeth into a bias and maintain that bias when your indicators are telling you something completely different. Believe your indicators. Don't hold on to a bias. It's the quickest way to lose money, is to believe in an expectation when your indicators are telling you something completely different. So once again, we get this long trade in here, we're holding it, and we have these retracements, and then look what happens. All right, and this is a good reason, to have a strategy that has good indicators that are telling you what the trend really is, not what you think it is, but what it really is. All right. So along about this point here, 2 o'clock, we get this something of an untimely long trade. And I'm seeing this trade and I'm saying, all right, well, we just filled all of these retracements that we expected to occur. We get one left below the market where this long trade now takes place. So that kind of calls into question whether that's accurate or not. And sure enough, the market runs up and we hit that initial profit target. But then if you look very closely at one of the indicators that I personally find to be highly reliable, and that is the 7-minute ESINX. We saw the premium here dropping below the zero line during that whole period where the market is shorting. In fact, one of our other strategies that does trade short took us into a nice short trade right there at the top. I'll show you that in a minute, but to finish the thought, so here it is, we drop below the zero line, and sure enough, the market starts to tank. Finally, it comes above the zero line right there. That's where we get the long trade. But shortly thereafter, it once again drops below the zero line. Well, we know that's not a good thing for a long trade, because it's telling us that the trend right now is not long, it's short. And here we're moving into, what's the time? 20 after 2, okay? 18 after 2, 20 after 2. The point is, if this thing is going to rally back to a new high for the day, it better get going, because it doesn't have much time. And normally the pattern would suggest that's going to happen before 2:30. Well, there's hardly any time at all for it to do that. I mean, not when the trend all of a sudden has turned negative, and as the strategy is now going short. So the strategy shorts the market, hits its first profit target, gets stopped out at break even +2. That's how we set that up. Another short trade happens here, hits its profit target, then breaks even at 2. And then finally another short trade takes place here right after the closing bell. And I'm saying, wow, what does that make this pattern out to be? Okay, because we figured this is what we would call a green day up. Well, late in the afternoon, instead of a green day up, this market turns into a red day down. Wow, what a change. Instead of a green day up, it turns into a red day down. So the bias there that we were expecting, based on what we could observe of the pattern, was a new high in the late afternoon. Turns out it's a new low in the late afternoon. And the only way you would really know that is if you followed your indicators. But if you're hanging on to a bias, you're gonna get yourself into trouble. Bias is fine if your indicators agree, but my goodness, you hold on to a bias when your indicators are telling you just the opposite, and you can expect to take a loss. So here again, that horizontal line is roughly equal to the low of the morning. And a red day down is a low in the last half hour, which, I mean, we have to go into the after hour market to see that occur, and then it continues on down. But that's what happened. Now, did that surprise me? Yeah, you better believe it surprised me. It surprised me far. Well, I was kind of flabbergasted, to be honest. I said, "Oh, you got to be kidding me!" But I'm so thankful that we have, indicators that are pretty accurate. And like I said, you got to learn how to read the premium. And when you read the premium the right way, there it is. It's telling you, guess what? I've switched directions here. And it switched right up here. Take a look at this trade. Right here, 1341, we get this nice drop. Another trade here that doesn't pan out. A little better trade here on the short. A little bit of a long that takes place there, and then another short here, and boom, it really tanks. And the reason I want to draw this to your attention is during that conversation that I was having with a couple of our traders in Michigan, a couple of real nice guys. Um, we were talking about, well, is there a nice way to to set up a strategy for scalping? And I said, well, yeah, there's lots of ways to do this. Of course, you want to trade with the trend wherever you can, but a simple scalping strategy is a very easy thing to set up in our strategy. So let me just describe that, because this is the very thing that we just did this on the fly. Not a lot of forethought into this, but this is what we did. One strategy, all right? Now, I'm not going to try to explain all of this to you, because it's beyond the scope of the strategy. But what we do is we first of all set up a strategy so that the slope of our volume bars on a 500 tick ES chart are in agreement with the trend. Okay? The slope of a 500 ES tick volume indicator is in agreement with the trend. That's what this setting is all about. And the next couple of fields allows us to look at the premium, and we want a fast 100 tick ESI premium and a 3-minute premium bar, which is establishing our trend, to be in agreement with the slope of the 500. And then finally, these last two fields, and this is the entire scope of the trade, has to be in agreement with both a 100 and a 300 volume bar on the ES. Now, what's unique about that is that when we look at the 100 and the 300, What we want to see happen here is that we get some kind of a move above the 0 line, and then when the bars turn negative or red, as the case may be here, on both of these above the 0 line, in agreement with the 500, which is negative here, and in agreement with the premium, which we talked about a minute ago, we'll get a short trade. It's just that simple. Now, normally, we're going to hold that trade for, just a few ticks. we had no reason to believe that this thing would turn out to be a cotton bloom and change in market direction, which is what it did. But in any case, this was created on the fly based on a simple request. Give me a scalping strategy. I said, okay, fine, here it is, and this is what it did. It's great. I love it. Nice little strategy. Very simple to set up. So yeah, we've got all sorts of strategies that we kind of rely upon as our backbone. But based on whatever your concept is, it's very simple to set up good working strategies that we recommend that you monitor them. I mean, I wouldn't walk away from a computer when you set something like this up, but this one was done right on the fly, and turned out to be a great little strategy that was set up just this afternoon. So what did we learn? Well, just as a recap, do not hold to a bias. Whatever your thinking might be could be correct, but if your indicators tell you something different, discard it. Do not get married to a preconceived notion about what you think the market is going to do. Now, so long as your indicators continue to confirm your bias, well, good for you. But if they don't, toss it away like a piece of garbage, because it probably is. And go with your indicators. That's the single biggest lesson we could learn from our discussion today. Don't hold on to a bias. We invite you to take a demo with us. I continue to repeat the same thing on almost every demo. You come and you spend time with us in a demo, and I guarantee you will walk away a better trader, even if you decide to never do business with us. We will show you some things that you have never seen before, and we will show you concepts using information, indicators, as well as data feeds that you probably have never seen, used in ways that you never conceived of, and we'll show you how you can incorporate that into your own trading strategies. We don't charge you for that. We hope you'll do business with us because we think you've got something to gain by doing so. We aren't cheap. Don't get me wrong. When you come up with something that's consistent, you can't afford to be cheap. But the point is, we've got good stuff here. Very accurate indicators, and if you come and ask for a demo, we'll talk to you about them, and we'll show you how to be a better trader. So with that thought in mind, we'll complete our little discussion today. This is Rod Kusanen, Spooman for Risk.